Okay, so we are here back on the chart. So in this video, I'm going to do the technical analysis of S&P 500 index for the week commencing from September 20th, 2021. So as I have shown you the power of options and the options trading, like within a day, you have seen that return of more than 150% in options. So if you want to learn options, or if you want to learn options trading strategies, okay, stock market strategies, then I have given the link to these programs within means in the description of this video, and also in the comment section you can take a look. Okay, now let's do the technical analysis here. So I'm going to cover this technical analysis as usual in two parts. So first I will do it on the weekly chart, and then I will do it on the daily chart. So this way we will be able to get the most accurate results like we have achieved here in this week and the previous weeks also. Okay. So first I'm going to start with the weekly chart. Okay. So first it is going to be the weekly analysis. Okay, so we have this weekly candle. If you look into this candle, it is a bearish candle, okay, kind of bearish hammer you can say. So the interpretation of this candle is that the market is that that the sentiments of the market are bearish. Okay, means people are expecting the market to fall. These are the sentiments of the market through this candle. Okay, and yes, there is still a lot of scope, because whenever the market comes down, okay, first it will find support here, then it will find support on these moving averages, and then here. Okay. If we talk about the support and resistances, look, this is the weekly chart. Okay, these are the weekly candles. So the resistance here, as usual, as I'm telling you for last couple of weeks, the resistance here is at 4525. Okay, this is a very heavy resistance here. Then very good support here at 4400, and thereafter another good support here at 4300. Okay, so market is not expected to move by like 300 400 points within a week. So we can expect that the market may hit 4400. Okay, currently the last closing price of the market was 4432. So it may hit 4400, not a big deal, and then it may hit 4300 also. Okay, then we have very critical support, and this critical support comes at 4185. Okay, this is very heavy support, this is very critical support. One more time, okay, all of these support and resistances, they are calculated through mathematical formulas. Okay, and also if you see that these supports are favored by the confluence zones, one here, and then there's a very heavy confluence zone here, which is why this support is very critical. Okay. So if we do the technical analysis here, first comes the moving averages. So through moving averages, the market is bullish. Market is still bullish because the market is on one side of the moving averages. Okay, so these are three moving averages, and then there are three more moving averages. So market is on the bull side of the moving averages. So market is bullish. However, we will call it as a weak bull trend. Means it's a bull trend, but it's a weak bull trend. We will not call it as a bear trend. Bear trend will be there only when the market closes below, then only we will call it as a bear trend or a bearish trend. Otherwise the market is still in the bull trend, but it's a weak bull trend. Okay. And now if we talk about the Chimoku, so market is still bullish. And if we talk about some other technical indicators here, stock RSI. Okay, stock RSI market is bearish, but the problem is that the K channel is more than 50. So if the K channel would have been less than 50, like 40, 30, then we could say okay that the market is bearish. But the K channel is still less than 50. Sorry, it is still more than 50. Okay, so we need to see like what happens on Monday, and whether the Monday, if the market comes down, then for sure the K channel will come down, okay, below 50 or below 40. but it is okay. Through this, the market is bearish. MACD, the market is bearish. Both stock RSI and MACD are supporting the bearish. Means they are saying that the market is bearish. Momentum, no. There is no momentum in favor, means neither in favor of bulls nor in favor of bears. Divergence indicator, divergence has cooled down. Okay, so divergence was very high here when the market has reached its zenith at 4,545. Okay, so now the divergence has cooled down and it is expected to cool down. Okay, so through all of these technical indicators on the weekly chart, through all of these technical indicators, it looks like that there is a bearish trend, or there is a weak bull trend that is indicating that there is a bear trend in the market and the market may come down anytime. Okay, but this thing will be more clear on the daily chart. This was the weekly chart. Okay, so now we are going to cover the daily chart. Okay, we are now here on the daily chart. So this is the daily chart and these are the daily candles, okay, that you are seeing here, the daily candles. If you see this, the last candle, it's a very heavy bearish candle, and because of this bearish candle you have seen 150% profits or 200% profits within a day. Okay, and the same was achieved here on September 14th. So which means that you should have, or you must have made at least 2 times profit, okay, on these 2 days, on this day and on this day. So if you watch my previous video, the video for the last week, then I told you that whenever the market rebound, okay, you should sell or you should buy put, and then you will make money. And that was the reason, okay, which why I am confident that you must have made a lot of money, okay, 2 days, on these 2 days, okay, at least 2 times or 3 times here. Anyways, this is the bear candle, okay, and the interpretation of this very heavy bear candle is that the market is about to come down. The reason is that for 2 consecutive days the market closed below these moving averages. But there is a problem here, okay, and the problem is that the market found very heavy support here on this moving average and also on the lower band of the Bollinger Band. Market has touched the lower band of the Bollinger Band, and also it hit this moving average, and then it bounced back a bit. So this is the problem here. So what we need to see that, like, what happens on Monday. So Monday is going to be a trend setter here. Monday will give you the direction. If you see a gap down opening here, okay, so if you see a gap down, okay, so gap down will tell you that yes, the market is coming down, because if there will be a gap down, which means that the market will open below the moving average and below the lower boundary of, or below the lower band of the Bollinger Band. So in this case the market will come down and it will hit this support, which is at 4,400. Okay, after hitting this moving average and the support, the market may take a U-turn. It may take a U-turn, and if there will be very heavy selling, then for sure the market will come down and the market will come to hit this support, this moving average, okay, this last moving average and the boundary of the Ichimoku. So this is around 4,325. Okay, so you need to see whether there is a gap down opening or a gap up. So now if there will be a gap up opening, then the market will try to move up. It will try to move up. But again, as I told you last week also, that the market is not expected to move up until and unless market closes above these moving averages, so if you see that 1 2 3 4 5, in these 5 days the market failed to close above these moving averages, and that was the reason why the market came down heavily on Friday. Okay, now, so this thing is very much clear that there is no bull trend until and unless the market moves up and closes above this these moving averages. So these moving averages are going to play a very critical role here, the moving averages. So market must close above the moving averages in order to move up, else the market will come down. Okay, so again, the same logic here, that you should sell on rebound. If you see that there is a rebound, okay, and the market is not closing above the moving averages, then you should sell. Okay, so again, look for a rebound or a pull up. Okay, so it is the rebound. So you should be looking for the rebound in order to sell. Okay, now, if we do the technical analysis here, so the moving averages, so the market closed below the moving averages, okay, but it found a very heavy support here. So market is within the moving averages, but it is bearish. So through moving averages, the market is bearish. The market is still on the bull side of the Ichimoku, so market is still bullish through Ichimoku. Okay, means, or you can say that it is a weak bull trend or the weakest bull trend through Ichimoku here. And now if we talk about some other technical indicators here, so other technical indicators, okay, we have the stock RSI. So stock RSI is saying that it is bearish. Stock RSI is clearly bearish. MACD is heavily bearish. RSI or the momentum, yes, there is a heavy momentum in favor of bears. So all of the technical indicators here are supporting a bear market, okay, or a bear trend. But again, be careful. Okay, so I'm saying, like, you should be careful because the market found support. So you should be careful here because the market found support here on the lower band of the Bollinger Band and also on this support. Okay. So market will come down only if you see that there is a gap down opening and the sentiments are heavily negative. Then the market will come down, and then you will see, okay, that there is a bear market. Okay, here. So this is my advice. So my advice, once again, wait for the rebound, and you must make sure that the market is not closing above the moving averages. Okay, then only you should enter. Means then only you should sell, or you can buy put of 4450. Okay, so put of 4450. If you are trading in options, then buy a put of 4450 on rebound, and for sure you will make at least 100% or 150% here. Means two times, you will make two times within a day. Okay guys, so this was my technical analysis for S&P 500 index for the week commencing from September 20th 2021.